Well, welcome back, everyone. I hope you had a wonderful week in markets. It was an exciting week and an incredible week in the active trader room and, of course, on WealthCharts. Let's take a look at the market right after the cash hours close and into the futures market close as I record this video right into 5 p.m. Eastern time on Friday. The uptrend channel that the market's been in since October of 2022, we got up to the very top of the channel. That's 2 standard deviations away from the best fit line. We reverted down to the mean. Let's get a zoomed in view of the hard right edge of this chart now. That's the top of the channel test that happened in early June, June the 1st. We then moved down to the pink line, which is the divisor between quadrant 4 and quadrant 3, and then came down and tested the center of the channel. Now, it is all too common that when we get down into the center of the channel, we see the selling slow down, and we usually, very frequently, see bounces, but they end up being dead cat bounces. What does that mean? Effectively, it means that the bounce that we're in is one that might not be able to continue forward from here. It may be a bounce that just feigns a retrace that can actually continue to hold up and then reverses right back down. Action back down below effectively the 74.15 area, the 73.90 area opens the door for downside risk. However, action remaining above the 74.32, 35-ish area, right where you see my cursors, right pretty much where markets are at this moment, keeps the door open for a retrace back up to the 74.91 area and or potentially higher. Now, can this market actually take this downtrend that is broken and give us a move up that continues for another day or two? It has the technical credibility to do so when you're looking at some of the technical indications. We have seen, for example, the daily chart convert back into a triple S buy signal state. The 4-hour chart's losing the double red dots, only single blue dots, so the sell signal's cooling off. The hourly chart remains in a buy signal state. Now, of course, we're moving into the weekend and into Sunday night futures open, where one wants to be careful, of course, with their holdings. And the way that I've approached the market and effectively communicated to folks in the active trader room and on WealthCharts alike is that this area, the 50% retracement of the high that we had right back over here on June the 1st to the lows that we had down over here on June the 10th, that halfway marker is really the good decider area. And if we happen to close slightly above it, I let them know in the active trader room and, of course, on WealthCharts that more likely we would see action towards the 74.91 area or slightly higher with a ceiling in that 75.40 area, very likely, and then likely action back down. One of the things that's unique about markets is that, much like people, we tend to make the same mistakes over and over again, tend to repeat the same patterns, hence a pattern, and we've seen the quake. We're setting up, I think, for the aftershock where we could have a continued rise for a day, maybe two, and then a pullback down in the market. Now, there are a couple of things going for the market to potentially continue rising from here into Sunday night. One of those things is oil has broken the bottom of a box that it was in. The other thing going for the market is, of course, the bounce up that we've had in the euro over the last couple of days, which was something we called out yesterday morning as likely, Thursday morning as likely. And that opened the door for some precious metals trades for those that were engaged in that area. There was some advance today. It was not dramatic, but this market is moving into the end of its session and has closing effectively right at that 50% retracement marker. In fact, the close has been 74.36 and a tick. So just a point or so above the center line that I'm pointing to right over here, and the 50% retracement marker as well. We're holding a few points above there. Now, this is not a robust close. We did see SpaceX work very well during the day and move in line with our Fibonacci retracement methodology. We had a retracement on from the lows up to the highs that were made at around 11:55 a.m. This is a 1-minute chart. We projected that we are likely going to see 173.90. We got that. We had a pullback, modest one over there, continued on to 176.59, that next resistive area. And then from that point, we saw it erode. Now, it's too early to tell whether or not the gap up versus listing and the action is going to get more robust to the upside or not. That's speculative at best if I was going to comment on it, but a little less speculative and a little bit more clear in terms of trading insight. Well, we know that the S&P E-minis and the NASDAQ have given us a showing at that 50% retracement marker, which is encouraging for maybe another half day to day of trade, pointed to the upside, and then some erosion to the downside. And of course, the stronger euro, weaker dollar, weaker value of oil, slightly stronger values of precious metals, and the configuration of the technicals all come together to support that rise. Now, just keep in mind, we're not out of the woods on the 4-hour charts on the S&P and or on the NASDAQ E-minis. So we still have some issues that can lead to consternation. And we have to watch that very carefully as we move into next week. Folks, I hope that you've enjoyed this video. It's been a great trading week. Was able to gross up just over $3,300 in today's trade. Looking forward to building on that next week. And of course, that was in my prop accounts. And of course, past performance is not indicative of future results. Consult your registered financial advisor before making any trades. And folks, I hope you enjoyed the video. I hope you enjoyed your time in the active trader room and on WealthCharts this past week. Looking forward to picking that ball up with you again to start off next week and carry the journey forward. Have an incredible rest of your day, and thank you for watching.